and welcome to the Screencast assignment explaining the accounting concept of internal control. My name is Jeremy Horniblow, and I will be discussing with you the ins and outs of internal control. First and foremost, internal control is a company's own setup of policies and procedures used to ensure its efficient and effective operation, its reliable financial reporting, and its compliance with applicable laws and regulations. Simple, really. Internal control exists everywhere across all industries in firms of all different shapes and sizes. The only question is, how big or how small a role internal control has in each business. Now, internal control can't be one single component used to cover so many goals for a business, so it is split into 5 elements. These elements are control environment, risk assessment, control activities, information and communication, and monitoring. Firstly, the broad umbrella-like element that is the control environment. This element sets the tone for a business's entire internal control operations. It is the consciousness of a firm that establishes the ethos of its control and workings. Without a control environment that is healthy and well-founded, the other 4 elements of internal control are jeopardized. In typical accounting fashion, the next element, that is risk assessment, refers to the assessment of risk. Risks that are posed to organizations on a day-to-day basis and threaten the achievement of their objectives must be identified and analyzed. Risks vary greatly in their nature and can come internally and externally to a business and then must be assessed and managed appropriately. Control activities is the next element of internal control, and these are policies and procedures used to address the aforementioned risks. They fall under categories such as establishing responsibility, in which each employee has a specific task for themselves and only themselves. Maintaining adequate documentation is another category, which means documents and accounting information must be free from error. Segregation of duties involves splitting up tasks and responsibility amongst employees to ensure less risk of error and theft of assets. Physical security involves the safeguarding of a company's assets and records, including fire and alarm systems, passwords and encryption and the like. Independent verification is the process of verifying information in a business, usually done by an individual with no connection to the process or employee being verified. Good internal control also needs the element of information and communication, in which relevant information can flow seamlessly through a business from management to employees and employees to management. Finally, the 5th element is monitoring, involving the assessment of quality of the overall internal control. In order to be constantly improving internal control, management must ensure it is operating smoothly throughout the organization. And last but not least, there are 2 limitations to internal control: the human element and cost-benefit analysis. Because even accountants are human, they too make mistakes, as do employees and individuals all across an organization, meaning internal control cannot always operate flawlessly. The cost-benefit analysis refers to the weighing up of whether or not the cost of a control activity outweighs the benefit it provides, and if the cost does outweigh the benefit, a company will be limited to a less costly control activity. Thank you for your time and listening to my screencast on internal control.